Hey everyone, it's Alex here, otherwise known as YaBonks, and on today's episode of the YaBonks Show, I have a new project that I want to show you called Nous Systems. Yes, it's called Nous Systems, Nous Systems, and it can be pronounced either way, new or noose. New would be more like a French pronunciation. Noose would be more like an English pronunciation, and it basically just means like a new way of doing decentralized finance, a new way to think about these things, and it is basically a decentralized hedge fund for retail investors to get exposure to things that would be more like traditional financial instruments, but usually available to institutional level participants. This brings access to those things to a retail level. So they are currently in pre-sale. They are doing their seed funding rounds right now, and I believe they are in like private round A or B of their private rounds, and then after that they're going to do like a venture capital round and then a public launch. So if you are interested in checking this one out, uh, go into their Discord server, tell them YaBonks sent you, or you found it through my video, and they can probably get you squared away in one of the private rounds to get you in at a much lower price than what it's going to launch at. All right. So without further ado, let's just jump right into it. I'm going to try to give you a really quick rundown. Okay. I've been going through all the websites and contracts and stuff and doing the research all night, and it's like 5 in the morning again. You guys know how I do out here, and it's an interesting project. It's not like this. It's not like a crazy degen project. It's much more reasonable in terms of like annual rewards and things like that. Something that you might see, similar to like returns in the stock market. Like I think it's like 23% ROI rewards in a year, right? APY or APR, whatever you want to say. So here you go. Nous Systems launches world's first decentralized investment platform. And it's going to be on the Polygon network. And they've already raised 7 figures in seed round fundraising. And it's like you only need as little as $100 to get started into it. And you can check out this article later, but I will just jump right into the DApp here, okay? So this is the like beta version of their DApp. It's being built out as we speak. It's actually somewhat functional in terms of being able to mint these NFTs and exchange them on the marketplace. So yeah, I mean, they have multiple NFT offerings, and these are all utility based NFTs. Okay, so each one of these acts as like some kind of a financial DeFi type instrument or utility NFT, right? And they have venture NFTs, so like new projects can launch NFTs on their marketplace here and mint them through their marketplace, and that will allow these new projects to raise funds and get new participants, and then also the marketplace generates revenue that way. Here is one of their bonds they have here. I'll show you down here, right here. This is a bond. Let me zoom in. This is one of their NFT bonds, and it earns 23% per year. This is their Nous A1, and the A stands for Arbitrage. This gives you access to the returns generated from their proprietary arbitrage bots that operates at the institutional level between very large central exchanges. And they have quite the team here. They have like a somebody. Their team's just pretty crazy, fully doxed and everything. But they've got like some AI professor I think from like Canada or something. Let me check. I could be getting that completely wrong, but I was looking at their LinkedIn's earlier. Where'd he go? Okay, it might be on one of the other pages, but here's their team. They got Tom, the CEO, Muhammad, the Chief Investment Officer, and this is who I've been talking with is Muhammad. I video chatted with him, and he's very knowledgeable asset manager in traditional finance, managing different asset classes and using different financial instruments. And he has a lot of experience doing that in cryptocurrency, and that's what he's been doing for the past many years. He made ton of money on Ethereum and has been just using that to do a bunch of cool stuff with. And here's Christijan, the CTO, got Ali, Henry, Reinor, and Illy. All right, so their LinkedIn profiles are all here. It's a fully doxed team, right? And this is a registered organization, I believe, in Croatia. So they are a registered company. And anyway, so this Nous A1 NFT gives you access to the arbitrage, institutional level arbitrage bots, and they've got, they're gonna have different offerings then. So they got bonds, they got proprietary financial tools, they've got venture NFTs to give you exposure to startups in the crypto space that launch through their marketplace or raise funds at least with their NFTs here. And all of these things have fees involved with them. This is what you would get after the fees. Okay, so I think there's an initial like management fee you pay when you mint one of these, and then there is a performance fee when you burn the NFT and claim your rewards and your initial back. And it's all paid out in stable coins. So this is all stablecoin based stuff, no crazy native tokens locked up in there or anything like that. Okay, all stable coins, and that's it. And that's where they take their fees. When you mint it, they take a fee, and when you burn it, they take a fee. And after that, you get 23%. Okay. Yeah, so this is it. Check out these articles on them. I'm not going to go too deep into this. I'm going to be doing an AMA with them in probably the next couple weeks. I'm going to get Muhammad on here and let him talk about this stuff. He is much better at explaining like institutional level hedge fund type investments and strategies, trading strategies and things like that. He's like an economist. He's got a degree in all that, and he's very successful in managing large crypto portfolios for hedge funds. So I'll just show you real quick. If I go to mint here, and this is still in development, okay? So, but it is pretty slick. Like, it looks great. So let's see. I can do the bond. You could pick like any of these other ones here. Let's say I want to put like $100 USDT for 3 months. I would get 5% return on that. That's amazing, right? S&P 500 generally is like 10% year after year on average. So if we're comparing this to the stock market, ETFs as a whole, this is really is about twice as good in terms of returns. And if you go to 6 months, it's 11%. If you go to 1 year, it's 23% return. And they generate revenue on the performance fees. Here it shows you right here. They have a management fee and performance fee. And yeah, I have to connect my wallet and stuff, but I'm not going to. I'm not going to actually mint one of these right now. But yeah, so this is how you do a bond. You can flip it over. It'll show you all your details. This is a 1 year locking period. Shows you how much you've locked up. So if I put in $100 today, it is saying that the payout would be $123 1 year from now, so 23%, okay? Now let's go to portfolio up here, and it will show what live NFTs that I have minted in my wallet. So I don't have any right now, but it would show you how much you put in, what your total portfolio value is, and then your total unclaimed rewards, and it'll show you the expired contracts here. Now, I believe you can claim the rewards from these weekly. So whatever that is, like 0.5% a week, it would turn out to be, if it's 23% a year, roughly something like that. You can claim them weekly, so that whole time you can be, getting some of your ROI back and all that before you get the NFT back to get your initial. So that's my understanding of it currently. So yeah, here's like the marketplace. Let's connect my wallet. Let's just see if it shows anything right now. Okay, so there's a couple things on here. So this Nous bond is $5.25, or that's how much it's worth, I think, at when it's mature. I think I could buy this today for $4, and then it would be worth $5.25 when it is ready to claim, and that would be in November 20th. Now I'm guessing this is testing stuff that they're doing right now, and so here it is. It's pretty nice interface. It shows you claim dates, when it was minted, gives you all the metadata here, shows you how much was invested, how much you would get in return. So this would give you 25 cents on $5 in 3 months. Not bad, and it's a bond, so it should be, I don't want to say anything's ever guaranteed, especially not in DeFi, right? So take everything with a grain of salt, do your research, like we're dealing with smart contracts and things like that. So we're trying to take away as much of the human error out of things as we can, but at the same time, this is new technology. But if this works correctly as a bond, that's a pretty nice return for what appears to be a low risk. Now, don't quote me on that. Anything can happen. Like I said, this is DeFi, but this is probably less risky than like what I'm doing out here, like trying to play the share tokens on tomb forks and stuff like that. You know what I mean? Anyway, so that's that. This is their DApp currently in progress. Pretty slick. Let's go to their other website. So make news money, browse, buy, and trade digital investment contracts. They use Chainlink, by the way. So they've gone out of their way to try to do everything correctly in terms of like how to get the pricing, how to manage the automation of these smart contracts using like Chainlink keepers. So it's a Web3 marketplace for investment. And these are digital contracts. So that's one thing I thought was interesting. They're not calling them non-fungible tokens. They're calling them non-fungible contracts. So each one of these NFTs is a non-fungible contract custom to you based on however you set it up with the parameters, and you mint it, you get that NFT, and then you can claim those rewards week after week for the entire life of that NFT, and then you get all your initial back. That's pretty nifty. You can check your performance here. Here's what I was showing you in the DApp. They're in day mode. I was using night mode because I love night mode. Anyway, they put in $2,460. Their portfolio in this screenshot in this example was up to 2,706. So yeah, I mean that's pretty slick. I can't wait to see this thing live. This might be somewhere I put some money that I just want to kind of set and forget and get some kind of like steady gains on it, but without taking too much risk. Now, again, I always try to diversify across all things, even things that I consider safe in DeFi, with what we've seen with like the algorithmically pegged stable coins situation where we thought something was super safe, but it turned out to be able to be exploited. You never know what's going to happen. So spread out your funds. Not financial advice, by the way, but even with some of these things that I consider lower risk, I try to diversify that as well. I don't put all my eggs in one basket. So just something to keep in mind. Anyway, I am probably going to stick some of this here in the low risk segment of my portfolio. So I'm going to have a diverse basket in that segment of low risk things, and I'm going to diversify in there. This will probably be one of them. I'll probably stick a few $100 here just to get some kind of consistent return, kind of like I would put in S&P 500. So here you go. Trade investments here. you can trade these things too, so you can put them on the marketplace if you need liquidity right away. I know some other projects try to do this, but with like native tokens, and it got messy. This is all stable coins, so these things are guaranteed in stable coins. And guaranteed, like I said, we can never guarantee anything. So I just want to always point that out. Anyway, but this is all in stable coins. So if you sell one of these on the marketplace, whoever buys it is going to end up getting those rewards and that initial deposit in stable coins, USDT, USDC, whichever they used. Bonds, funds, ventures, and yeah, this is pretty interesting. So they've got the bonds that they showed you where they kind of a bond, they basically take on a debt and say, you give us X amount of dollars, and in 6 months time we'll give you that back plus some interest on top of it. So it's like a short-term loan basically, and with a 23% interest on it. And they are also going to release NFTs that give you access to arbitrage trading, like I was saying earlier. And they have multiple back testing strategies through bull and bear markets combined over like 3 or 4 of the largest central exchanges. And the results were very good, apparently, on their AI arbitrage bots that work at the institutional level. So they are going to be releasing that one very soon, I believe, the Nous A1 NFT. And then there are going to be the startup project NFTs. The first one is the first batch is going to be called Batch 001. So there are going to be a bunch of ventures coming out, and they're going to be in Batch 001, kind of like their Genesis batch for startup NFTs, right? And that will be October 2022 they're looking at. So yeah, that's it. And then just to kind of wrap things up, like I said, there's not much to cover yet right now because they're in their private funding round, but they're also going to be coming out with a token called the Nous token, NOUS, and that token will give you exposure to the entire business model and also give you payouts quarterly in stablecoins if you stake it. So the Nous token is what the private round fundraising is for, and that is going to give you the Nous tokens, which they will be using the fees generated here. They have the venture fees from the ventures launching on their platform, so they take a fee from them. They take a management fee for when you mint your NFTs. They take a performance fee when you cash it out. And then there are also some other fees as well. Let me see. Secondary market transactions. Okay, so the secondary market transactions is when their secondary market NFT market, where people are buying and selling those NFTs to each other. They'll probably take a transaction fee for that as well. And all that revenue goes back and does things like buy back the Nous tokens and burn them, limiting the supply. And also that revenue will go to paying out dividends, or I should say quarterly rewards in stablecoins to those who stake the Nous tokens. Okay, so that might be my play here, is I might get some of the Nous tokens and just stake them and then get BUSD, or not BUSD. This would probably be USDT or USDC because this is on Polygon network. I would get that reflected then into my wallet, I believe, or I think there'd probably be like a claim button somewhere. But yeah, that's it. And also, they're going to let other financial institutions and stuff launch products like these custom NFTs for bonds, or like their arbitrage bot NFT. They'll let other hedge funds come on here and be like, hey, we've got this awesome portfolio that's doing great. It's been doing great for a long time. And maybe they'll make an NFT and you can mint it here, get exposure to it, and then it'll benefit the Nous ecosystem, help, fund those bonds. But I think they're also doing institutional level hedge fund trading as well. Like Mohammed does this professionally and has for a long time, with very, very large hedge funds. And like he's telling me, the 23%, they're actually doing like 43% or more, but after the fees and everything, you end up seeing 23%, and that's how they fund the whole business, fund further development, pay out those dividends. So yeah, I'm gonna be doing an AMA probably with Mohammed, maybe some of these other guys, and it'll be very interesting to hear him talk about his different strategies that he's used in his career as an economist, managing for hedge funds and large financial institutions to make money for them. And now he is doing this in the crypto world, and they're launching this in a decentralized finance type way. This is almost like, how like Robinhood allows like retail traders to come in here and trade stocks and options and all this stuff with like very little barrier to entry. This is like that. It's like, what do they call it? New brokers. It's the new age of brokers, where you can come out here and you can gain access to financial instruments and tools that normally retail traders like us wouldn't have. So like higher yield bonds, access to institutional level arbitrage bots between central exchanges. Now let's keep going. So they just did a hackathon, and I wanted to point this out. So in the hackathon, they just got back from this. It was the Polygon hackathon, and they're saying they're the Amazon for investors. It's a Web3 marketplace for investment opportunities, pioneering a new use case for NFTs as digital investment contracts. And watch this video if you can. Subscribe to them on YouTube. They show a really nice looking demo of how this works. And yeah, they explain how it works. They said they added a new utility during the hackathon for the bond NFTs, and that's interest payments. So you can claim your dividends from the investment on an annual or monthly basis. And this way you can claim the rewards regularly, instead of just waiting for the bond to mature and then getting your initial plus the rewards back all at once. This way you can take those rewards as you go, monthly or whatever, and those are all, like I said, all paid out in stable coins. So that's nice. Stable coins are good. Bear markets especially. All right. It's cool. If you want to dive into it, like I was going through how they're doing this stuff, how they're managing these contracts, and they do a lot of on-chain automation here, and they use keepers, Chainlink keepers. And I won't even get into it. Like this was supposed to be a 15-minute video. I'm at 23 minutes already. Whoops. Sorry guys. There's just so much here. I haven't even brushed the surface, but I've been up all night. I've been going over this for days on top of all the other stuff I've been doing. And I'm sorry if I'm butchering this, but it's the middle of the night and it's a lot of new information to cover. So it's cool though. I am looking for lower risk and more reasonable returns compared to the super degen stuff I do, where it's just like nerve-wracking and I'm sweating, my heart's pounding, my adrenaline's going, and I'm just like, oh, if this trade doesn't go my way, my wife's going to kill me and I'm going to have to get a third job, right? Anyway, so check out the white paper. It's super informative about how they do this stuff. So I won't read it for you word for word or anything like that, but they have some really great infographics. So this is how they do it. You mint your smart investment contracts on their Polygon dApp. You do a one-time payment into the ecosystem. There's a 2% management fee. That then goes, the money then goes to the Chainlink keepers. And the keeper, I think they're like Chainlink keeper nodes. and they manage the funds in a series of wallets in preparation for trading. Those then manage and automate the trading according to the smart contract specifications. And then after the contract expires, the Chainlink keeper keeps track of like the timing of things and automates this process. And it sends the funds and the profits back to you, minus the performance fee. And then the NFTs are burned. And then they leverage the user fees that were generated here to develop their talent pool of developers and to support the Nous ecosystem with a suite of on-chain investment products to keep expanding their offerings. And then it says here, when you mint it, the smart contracts are stored on the Polygon network. All contracts minted with Nous remain decentralized and fully transparent. And then it goes back into the Chainlink keepers to manage this stuff. And if you don't know what Chainlink is, you should probably at least have a general understanding of like what services they offer in the DeFi space. One of them is called oracles, and that's how you can get information from the real world in a trustworthy fashion that is like double checked and verified and averaged from multiple sources, so that way somebody can't manipulate one data source and mess up your smart contract and trick it into doing something it's not supposed to do, like a flash loan attack, right? So if you're not using like Chainlink oracles to get your price data, you're crazy, most likely, or you don't care, or you don't know, right? So they're doing things the right way. It seems like they're following best practices. If you go through the LinkedIn profiles of their team members, you can tell they've gone through a lot of very specific blockchain developer training and certifications, including like Chainlink stuff. I mean, I won't even go into it. I'm just gonna dig right back into this stuff. Okay, so they're saying here it's low risk and high security. That's one of the nice things about smart contracts. You can read how it works, and then you know the rules of the game basically. And then that's it. So you mint one of these contracts, you have it, the NFT, in your wallet, and then the Oracle just like updates it, and then you get your money back after the expiration date plus the ROI. That's how it should work, okay? And yeah, so check this out, guys. There's the execution layer here, their tech stack. Then there's the management layer where the investor funds are monitored and automated. And then there's the deposit layer, and that's where you interact with it, where you put money in and money comes back to you. And they're also working on a credit card portal, so that way people without funds on the blockchain can just, put their credit card in, swipe their card, and buy themselves one of these bonds or the Arbitrage bot NFTs or a venture NFT, and get exposure that way. That's pretty neat. I think it's a way to onboard fiat onto the blockchain. So check this out. So I like this here at the end. It says their first priority is to offer a decentralized investment vehicle for cryptocurrencies, and for future scaling, think about using it for contracts like mortgages, loan management, credit card payments, and they're all liable to smart contract integration in the not so distant future. And I think that's very true, because you hear these fiascos where like a bank branch burns down and people lose their mortgage documents and they don't have any copies themselves, and then it's like people are trying to figure out who owns what and who owes what, and that stuff has happened in the past, and it can be a nightmare, I've heard. And blockchain technology and the redundant databases in redundant geographical locations for data centers and stuff like that. Like there's nowadays big banks and large corporations store their data on in multiple data centers that are geographically redundant, right, with like backup systems and all this crap. But the next stage, the next level beyond that is blockchain. So that way it's literally like a network of data that like you can't kill it, right? Most of the time, like Bitcoin, like you can't kill it. I'm sorry, like some dude's gonna be running a Bitcoin node, and some other dude's gonna be running a Bitcoin ASIC miner. That network's gonna keep going, right? So the data on there persists. And the Ethereum network, proof of stake's coming. It's gonna be different, but it's that data's out there, right? It's this like stateless blockchain, and it's immutable. It's out there forever, and that means it's going to be very safe for like keeping mortgage documents and loan information out there to not be tampered with or lost or destroyed. And I think it is cool for that. However, it is scary in terms of monitoring and privacy concerns, because the blockchain and the ledgers, they're all public information, most of them at least. And whatever you do on here is basically out there forever. And you just leave breadcrumbs everywhere. You can't really cover your tracks. People think they can, but like if you really wanted to know, like you can go ask central exchanges to help you out if you're like the FBI or the authorities, and like they can find out what's going on even when people go from like DeFi to CeFi and try to do things like that. Anyway, so privacy, if we turn our whole monetary system to something like this, it's terrifying to me. I'm getting off topic here. Let's go back to Nous. So here we go. Keeper nodes. You should really check out these sections here in their documentation about the Chainlink keeper nodes. And so this is very important, and not many people who aren't developers know this. Smart contracts keep an immutable record of their functions by design, but they cannot execute these functions without the intervention of a third party. Okay, so automating and executing functions on a smart contract is very hard. You can't really automate tasks. You can't do like scheduled tasks in the smart contract itself. You have to call it from outside. And a lot of people use Gelato, I think, is a service that's popular for automating tasks and calling smart contracts and making them do things at certain times. Gelato's a third-party service. Keeper nodes, I believe, from Chainlink are a service that does that as well. And yeah, and they keep stock of the metadata in these NFTs, and then they enforce contract specifications when they come into play. Basically, they ensure automation without a centralized contract manager. So that's what's important here in terms of adding another layer of kind of redundancy and safety, is that like you take the human element out of it and you really just have this stuff automated as trustless as possible. You don't need somebody clicking a button for you. You don't need to reach out to tech support for help. You just, it's all handled automatically. And when those NFTs expire, you just get that stablecoin all back. And yeah, so that's it. And then it shows you how to do it. Blah 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 blah. Pretty interesting here. There's another little infographic that might help you understand. This one's even more simplified. So the metadata contains terms of agreement and represents the financial contract. So you trade your cryptocurrency, your stable coins, for one of these NFT contracts, and you basically get the NFT as a receipt of this contract with some of the metadata, some of the parameters of the contract, of the financial instrument. And then the NFT feeds back performance data and allows the user to cash in at the contract end. And here it says Chainlink facilitates management and automation of market wallets. Okay, so that's as I think as good as it's going to get for me explaining how that works without getting too crazy into the weeds. And let's go to the next one here. So let's get into some of the private fundraising round information, because there are only a few days left for that. I think sometime in the first week of September, they are going to close down the private rounds A and B. And that's it. Like we're what, August 27th or something right now. I don't even know what day it is. So yeah, I think it's August 27th. So a few more days to get into the private round A and B if you are interested in that. And I'll get to that in a second here. So proprietary investment products in a marketplace model. Here's how they make their money, all right? They got the listing fees, the minting fees, the management fees, the secondary market transactions, the venture commission fees. And then on their proprietary products like those bonds and the A1 NFTs, they've got a management fee and a performance fee. And I was asking Muhammad about how traditional hedge funds work and what kind of fees they charge. And this is in line, apparently, with how traditional hedge funds charge fees for managing portfolios, and they take like 20% off the top. So he's like, yeah, you'll generally make like 40 to 50%, and then you take 20%, you give them back 20 to 25%, and yeah, so and then you take a small management fee. So 2% management fee, 20% performance fee, and after all that, you're getting, for the bonds at least, and the A1 arbitrage bot, 23% rewards yearly. Okay, ROI, APY, APR, whatever you want to call it. So here's the roadmap. They got so much going on. They just did the Polygon Hackathon here in Q3, and we're going from Q3 to Q4 as we speak. They are in the fundraising phase. They got their audit for the bond contract. They are currently raising the private A and B token, fundraising. They've done the Chainlink integrations. They're going to be doing next quarter the crypto on-ramping integration for fiat currencies with credit cards. They're going to be launching that marketplace the end of September. The marketplace will officially be launching if all goes according to plan. They're going to do cross-chain stuff. They're going to launch their A1 NFT with their arbitrage bot, and then they're going to do their institutional fundraising round at that time as well. And then the rest next year. Their roadmap's pretty neat as well. Okay, check this stuff out. They're gonna do like lending and borrowing based on these NFTs. You know, they're calling them non-fungible contracts. But they're gonna do lending and borrowing based on that. So how cool would that be? You've got like a bunch of these bonds. You know, say you got $1,000 worth of bonds, but you want to make even more money on them, more than your 23%. Maybe you can lend some of that out. Maybe you can lend those out and get extra return on it. I don't know. That'd be interesting. Maybe you need some money. Maybe you borrow money using those bonds as like collateral. Who knows? Okay. So that'll be interesting to see what they come up with there. And like I said, these all seem to be very, very smart guys. Okay. So go read their LinkedIn profiles. Like look at this guy, Chief AI Scientist from Montreal, Manuel. Go check him out. Check their CTO out, Christijan Muhammad. Check out his history and his, these guys all have awesome pedigrees from what I was seeing, and it's a fully doxed team. You don't see that too often, like never. So these are fully doxed. They're registered company and everything like that. Here is the private round information. They're raising $4 million for the token. Okay, now I do believe they already have 7 figures raised before this, according to some of the stuff I was reading in their public articles. But they're going to be raising $4 million through their token offering. Private round A and B right now are going on, and you can get it's 10 cents and 17 cents, and they're going to only be raising a small amount in those private A and B rounds. Reach out to them and talk. If you can get a hold of them and like me and stuff like that, let them know, and they might let you in on the private A and B round. Right now it's going on for a few more days, and I don't know if private A is closed yet, but like tell them YaBonks, you saw YaBonks' video and he was talking about this. Maybe like Muhammad's he's a nice guy, and I think he's willing to work with people. And then they're going to be doing their VC round at 22 cents, and then their public launch at 25 cents. So, and they're going to raise $1 million with that one. So that's, and they're going to be raising 2.2 million for venture. By the way, I know a lot of you are going to be like, oh, aren't these guys just going to dump right off the bat, the guys who get in early and the venture capitalists? There are, let's see, for the private A and B, there are 12-month vesting periods, a linear vesting schedule for these. Okay, so you can only like 1/12 of your tokens would unlock each month until the end of 12 months. And then the venture capital round, these venture capital funds, and I saw some of the people they're networking with. I can't tell you who it is. It's confidential at this point in time. But a lot of big names, potentially a ton of money. Like this right here, for what I was seeing, would be nothing. This would happen in minutes with the people they're potentially partnering with in terms of venture capital. But those venture capital firms that invest here in the private rounds, I do believe they have a 36-month vesting period. So these tokens won't be hitting the market, at least not all at once. It'll be a tiny bit at a time over 3 years, okay? And yeah, so they thought this out. They thought out how they're going to do this. Yeah, okay, so next one. Let's go real quick. The A1 fact sheet. So A1, the arbitrage bot NFT, right? It's a market neutral arbitrage strategy. Gives investors exposure to digital asset markets while reducing exposure to drawdown and volatility. It's 23.3% annual return and 2.8% volatility. It explains what arbitrage is. It's basically you buy and sell something at the same time, and then you take advantage of the price difference for that same thing, right? So they exist in cryptocurrency markets just like they do in traditional markets, and I see them all the time in different decentralized exchanges and liquidity pools. I see assets with different prices, and I'm like, man, I should arb that, right? Like it's 50 cents difference. If I buy $1,000 of it, I might make 50 bucks like that, doing just about nothing. And you can make bots to do that for you, and you have to be, you have to know what you're doing, though. It's very technical. There's a lot of risk. If you do it wrong, you could lose a ton of money. But they apparently have a very, very solid bot. They've got that one, they got a really solid team of developers. They got the chief AI guy working with them too. And yeah, so it's going to be using large trading pairs and exchanges and basically just arbing those. And over there, they did a bunch of back testing over multiple bear and bull markets, and over 3 major exchanges: Binance, Bybit, and FTX. And they on this they got a 31.1% return, and so they're saying annual returns realistically 23.3%. With a Sharpe ratio. This is basically used to calculate risk reward ratio, okay? So a higher number is better. If it's over 1, that's good. This is a 7.44, right? And that's the multiple of return to potential risk. So you got 2.8% annual volatility, but you've got 23.3% annual return. So there's very little volatility in how this thing trades, because it's a market neutral strategy, and it's not really exposed to any asset for more than, like, I don't know, probably seconds, right? And it yields that much return on average. And yeah, gives you an example of how it works. It's really cool. I really like this document, especially if you don't know what arbitrage is. It really breaks it down and shows how they do it. They don't give their exact algorithm, but you could tell they understand this stuff very well. So they show how the arbitrage bot works, and they also show how it integrates with their NFT contracts that you can mint and hold in your wallet, and how the profits generated from the arbitrage bots go and get distributed to those NFTs and to pay out the rewards according to the timeline and the schedule set out in those NFT contracts using the Chainlink on-chain monitors and nodes to execute things. So very cool stuff right there. Let's see, what else we got? Anything good? They got a nice Medium article here about how they integrate their Chainlink services to secure their platform. Very educational stuff. I highly recommend reading this just out of educational purposes, talking about like why you should do this. And then they have another Medium article about their initial coin offering that I just explained. And, they got a capped supply. The total supply is capped at 100 million tokens. And they're only launching 20% of that supply, 20 million tokens. And then they're going to be using that revenue, like I said, to buy back and burn those and increase the value of it. So they're saying it acts similar to the way that like stocks work, like a share in a company. It's similar to that. Okay, it's not the same. It's similar. I gotta be careful how I talk about this stuff, because this is all European based stuff, and I'm in the U.S., so this is I don't know. Talking about anything in crypto, you gotta kind of be careful how you say things like shares or dividends or profits or any of that stuff, because this is crypto, right? These are new tools that aren't defined or regulated around here. So even though they act in certain ways to things we're used to, they're not the same thing, right? You can't call them the same thing, but you can say maybe they act like it, right? So this might act, these tokens might act like a share of equity in an enterprise of some sort. It's analogous to that, right? And they even pay out quarterly rewards in stable coins. So you get cash like every quarter, just like you would with stock, right? But it's not a stock. Okay, I've got to be careful about that. Just want to be very clear. But this is like this is how a lot of crypto projects do it. They basically give you exposure to the company's profits and revenue and overall growth as they just keep growing and operating. So they say this concept mirrors share repurchases in the stock market by reducing supply, and the tokens will become more valuable over time. And then the fee issuance, they will allocate fees to token holders who stake their Nous tokens. So it operates like a dividend, but it's not a dividend technically, but it operates like it. It's a quarterly reward paid out in stable coins, in cash, right? And that is super cool. I love stable coins. And so this whole model here, if everything goes well and their business is executing according to plan and they're rolling out all this stuff and people are using their NFTs and they're generating all these fees, then they're going to be buying back the Nous token, burning it. The price should be going up because people are going to be wanting to get those rewards every quarter. And so they're going to be buying up the Nous tokens and staking them. Meanwhile, the project will be buying up the tokens and burning them, limiting the supply and raising the price. So my play here on this thing, once this all comes out, I'm probably going to take some Nous tokens and I'm just going to stake them and just like put however much in there and just let it ride and see if the Nous tokens go up in value, as well as pay out those quarterly rewards in stable coins. So that would be cool, right? Like, I know a lot of people always talk about like, oh man, I got a dividend stock portfolio on this app or that app or this broker, that broker, and they get X amount of dollars in dividends from their stocks per quarter. And some people even live off that, and that's amazing to me. Now, this is a way to do it in crypto. In DeFi, you can do something similar to that, where you can stake, these tokens and get exposure to this business, and also get quarterly rewards in stablecoins, right? So they're trying to create long-term value for users of Nous products and Nous token holders, right? Cool. So they're gonna reveal even more revenue allocation strategies at the token generation event. So when the Nous token launches here in probably, well, I know the marketplace is launching in September, and they're still doing the fundraising for the Nous token thing in the private rounds. So I'm not sure the exact launch date of this, but this is the plan with the token, and that's how the token ties in with the NFTs and the marketplace. So I hope it all makes sense now. I was going through actually the bond NFT contract on Polygon network, and it's very interesting. It's like 3,000 lines of code. It's not a easy read, but and they're doing some more advanced stuff than you normally would see, using chains and Chainlink stuff and oracles to get prices, and it's it's a doozy, right? And I do believe this one has been audited already by Quillash, I think it's called. Anyway, check them out on Twitter. Give them a follow. They've got a bunch of stuff in here explained that I couldn't find anywhere else. So they do these like long threads where they explain some like how their bonds work or how their arbitrage bot works in more detail, or like how the news revenue is going to go towards the tokens and things like that. So go check them out on Twitter. You'll get a bunch of good information there. Check them out. Join their Discord, because there's stuff on their Discord that is nowhere else as well. Yeah, that's it. That's Nous Systems, NOUS Systems, Nous Systems, European based like hedge fund, DeFi hedge fund that is bringing like hedge fund and institutional level financial instruments to the blockchain for retail investors to have DeFi exposure to. It's pretty cool. And it's not as degen as I'm used to. I'm used to doing some super high risk, super gambling style stuff. As you know, if you've been watching me, you know I love the high risk stuff. I shouldn't, but I do. And this is way more conservative. 23% APY for these initial offerings, the bonds and the arbitrage bot NFTs. 23%. With DeFi, I wouldn't get out of bed in the morning for that. However, I get out of bed for like 2% per day, and then I get wrecked and I lose, 20% of my bag like that. And then I'm just like, why did I do that? I should just put it into something like this or the S&P 500 or something. Not financial advice, but like, if you do 23% APY, that doubles like every couple years. I think 10% APY doubles every 7 years. So if you're in the S&P 500 getting 10% average per year, then it doubles every 7 years. And that's how people like set up their retirement plans. So that way when they retire at 65 or whatever, it's doubled every 7 years, a retirement account. And then that's kind of the math that a lot of people use. This is 23%. This is going to be at more than twice as fast, but even more so because of compounding effects. If you compound your rewards back into it, I don't know. Not financial advice. Check this out. Make your own decisions. This is all very early. It's a young and bright team, but they have experienced advisors on the team though. Like they've got a really big docs team. Their LinkedIn profiles are stellar. So go check them out, man and ladies. And that's it. I should wrap it up here. I said this was going to be a 15-minute video. It is 53 minutes. What have I done? I will be getting Muhammad on here probably in the next week or two if I can pull him away from all the private round fundraising that's going on right now. And I'll see if I can't get him on an AMA to explain this stuff in more depth. When I was talking with him, he was telling me stuff you can't find anywhere else in the documentation or the websites or anything. This guy is just full of knowledge about finances and economics, and he has a lot of cool stories about that stuff. So anyway, you guys, that is Nous Systems. I hope you liked it, and I will be doing a few more videos on this. I am planning on it, and I really want to get Muhammad on here for an AMA to talk about how they do things behind the scenes. Like, yeah, I get the arbitrage bot, right? But I want to know how they do their bonds and what else they're coming out with. He's got a lot of really cool information. Maybe I can get him to kind of spill the beans on some of that stuff. So anyway, you guys, I appreciate you watching. If you haven't, hit the like button on this. Subscribe to my channel if you would. It helps me out, helps the algorithm. Let me know what you think about this project down in the comments below. What do you think about it? Are you going to try it out? if you're interested in getting in on the private round A or B seed fundraising rounds right now, go to their Discord server. They have a form there that you can fill out, and you can reach out to them and see if you can still get in on the private rounds A and B right now. And that's going, I think, until the first week of September. So like 5 to 7 more days. And then I think that's it. So Nous Systems, it's a new one. To me, it hasn't launched yet, and it's a more conservative, potentially lower risk offering that I've been trying to do more of this kind of stuff instead of just like the super degen projects. I want to bring a good mix of like, okay, this is super high risk, super high reward, and this is like a little bit lower risk and a little bit lower reward. And because, you know, I want to have a portfolio that's like a mix of both and some kind of distribution. So yeah, this is a cool one. Nous Systems. You'll hear me talking about it a little bit more. I'll probably send out some tweets and stuff. And if you're in my Discord server, I'll be in there, and I might be able to help some of my community members get in on the private round A. I need to talk with the team about that, if they can do something for my people. I want to get them hooked up where I can. And that's it. Thanks for watching. This is Alex, otherwise known as YaBonks, and thanks for tuning in to the YaBonks Show. I will catch you guys later. Thanks. Bye.